I currently have 185.5 shares of SPMO in my portfolio, and I'm up about 7%. Just yesterday at lunchtime, I shared this in the Discord. SPMO had hit a new all-time high of $125.99, and that share price kept on moving up. The reason why I'm touching on this is because many investors automatically buy the S&P 500. This ETF has been outperforming it. It's been around for the last 10 years. I just incorporated it into my portfolio a few months ago, and I've been putting in the work to build up my position. So in today's video, we're going to be talking about why SPMO is beating the S&P 500, what makes it different from other ETFs, some risks associated with this fund, and how I'm using it in my investing strategy. This might be one that you've overlooked. So this is Invesco's S&P 500 Momentum ETF. As I said, that share price kept going. As of the time that I'm recording, the now historical high for the fund is 126.67. If you've been here before, you've seen me on my journey, dollar cost averaging, setting those orders, building out my position into SPMO, making comparisons to other funds like QQQM and the S&P 500. This is what I'm doing here, sharing my journey, how I'm going about researching things and finding the right fit for my goals and needs. I really jump in with huge investments. I just stay consistent and keep on building. This process has been working for me to have me on track as I plan for retirement and build up my taxable accounts. Let's get a little bit more into what is SPMO. It starts with the S&P 500, and then it leans more heavily into companies showing momentum, meaning stocks that have stronger price trends. So when you invest into the S&P 500 through ETFs like VOO, you own the whole team. SPMO narrows it down to the hottest players, giving them more minutes of playing time, rotating and changing their fund twice per year. This is why it can outperform the broader index. It follows a rules-based process. There's no emotion. It's systematic, and that's what matters. Now let's talk about why people are paying attention to this fund. It's outperformed the S&P 500 multiple periods. It's following its structured process and rotating faster than some other funds. Funds that are usually concentrated into semiconductors, AI, large cap growth, software, and even financials. So this is where you can benefit from that momentum strategy. So let's compare it to a few other funds in addition to the S&P. On the chart right now, I have SPMO, VOO, which tracks the S&P, QQQM, the Invesco NASDAQ 100 ETF, and MTUM, and iShares Momentum Factor ETF. So MTUM is another momentum ETF, but each has its own style. SPMO stays tied to that S&P 500 group of companies. And when it comes to these ETFs, SPMO is the leader. I have it on the 10-year chart right now. SPMO up about 450%, MTUM 314%, VOO 296%, and QQQM 122%. Now, no investment is perfect. No ETF is going to win forever, but this one has been proving itself. Investments carry risk, and you have to decide what level of volatility, the type of exposure, and other factors. So you have to develop a strategy that is in line with your goals. The market has been on a move up this week. But when it comes to SPMO, in choppy markets, this momentum-based fund can struggle. There is concentration risk. This fund is heavy into tech at 43.6%. So when there's a pullback in those areas, I'm going to feel it in my portfolio. So yes, a higher upside when it comes to that growth potential, but I also have to be ready for those bigger swings. That's why the position size matters. I have a much larger investment into the S&P 500 and other investments that give more stability, but steady growth. We've been dealing with a lot of uncertainty, and it's not over yet, but the market is pushing up this week. We're seeing headlines like this. Trump is saying that the war is very close to over and the stock market is going to boom. And also that peace talks could resume within the next 2 days. So even though things are not resolved, the market is reacting positively. But whatever the market is giving us, I'm just staying consistent, moving forward, and staying on track with my plans to build up my portfolios, buy and hold. I just shared an update about my investments into the S&P 500 and transitioning from a fund that has nearly 1% expense ratio over to FXAIX at a 0.015% expense ratio. I was so glad to discover that, to be invested through 2024 and 2025, capturing those years of strong growth when it comes to the S&P 500. And now I'm looking at each one of my investments differently. That's a core anchor position for stability, FXAIX. SPMO is incorporated for growth. It's the sail on my ship. The anchor keeps me grounded. The sail helps me to move faster. I'm going to quote one of my mentors, Keenan Grace. He basically says, when investors think or, sometimes they're thinking poor. I'm not replacing my core position. I'm adding different things in to complement it. I have that flexibility. I'm building what's a good fit for me, and everything that I need is not going to come from one ETF. Remember, this is my financial journey that I'm sharing. You have to find the right fit for what you're trying to accomplish. So I'm still watching SPMO closely, waiting and seeing if rates improve, continued growth for this fund, how the AI spending now will impact the revenue for some of these companies down the road. No one knows what's going to happen next, but this fund caught my attention, earned a place in my portfolio, and is now a part of my long-term strategy. My portfolio is a mix of different things. Let me know in the comments. Do you own SPMO, the S&P 500? Share some of those foundational investments, growth investments, dividend focused. What are you using to build wealth for the long term? And like me, has your strategy evolved over time? Okay, that's it for today's update. Make sure to like, subscribe, hit that notification bell, hype this video. Support the channel by becoming a channel member, opening a new account over at MooMoo. The link is in the description. You'll get 8.1 APY on your uninvested cash, free stock, great research tools. So click on the link, fund your account, and get started. Thanks for watching. Okay, bye.